Yeah, good morning. All right, let's get going. Good morning, comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. The secret to building a successful trading and investing business is to start with a good platform, foundation, if you will, and that is having a broker that does not trade against you, but actually executes your trades into the interbanking system. They actually provide you a service, a quality service. Make sure you have a good broker that you trust. I trust Traders Way. You should check them out. In particular, they have a unique business model based on an ECN, straight-through processing system, and that is unique. Very, very few foreign exchange brokers have a process like that. So you should check out Traders Way, see if you like them, and if you do, build your foundation on top of a quality service provider. And then you need good information to make informed, intelligent decisions. Yes, Traders.com will help you automate your fundamental analysis and your technical analysis, and the coaching courses and community helps with trader psychology. It's a complete all-in-one stop package. Okay? Absolutely cool. And we're going to use TRADARS today, as we usually do. And so we can check it out. We don't quite have enough votes yet on the poll, so I'm going to leave that. We need more to make the data set reasonable. There we go. All right. All right. So anyways, we could do a little quickie here. A little quick and dirty. This might influence your poll, but right now it's not risk on. GDP 3.0. The economy is too strong for the Fed to cut as fast as they thought. Less cuts. Stronger dollar. Yeah. Oil down. Gold at 27. S&P 500 just getting ready to open. Okay, and Bitcoin up. Just quickly review some of the things. So Switzerland cut interest rates. GDP 3.0 and claims 218. That's another doozy. Claims should be above 2 or should be around 230 for the Fed to cut interest rates. But claims are falling, not rising. That's another reason the Fed may not cut as many times or as fast as everybody previously thought, and that actually makes the dollar stronger. Oh my God. Yeah, that matters, bro. Yeah, that matters. So you got to keep an eye on things today, like maybe watch the money market. And we want this to drop down, not up. And right now it's moving back toward the moving average. We got to keep our eyes on the options market. And right now it's very, very bullish. Looking at claims here, I'll just show you. Okay, we looked at this in great detail earlier this morning as part of the fundamentals team, so I don't really need to cover it again, but I'll just show you that, you know, we've been averaging 231, but in the last couple of weeks we dropped, you know, what was that? It was revised to 222. And now we're printing 218. You're like, wow, dude. Okay, so anyways, like I said, already covered this in great detail, and this is where you find those videos.
Trading is risky and not suitable for everyone. Your past performance, good or bad.
Started. All right, good morning, everybody. Welcome to the formerly known as Quant Box. So this is me this morning. Okay. And this is the news trading team that covered GDP durable goods.
It's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Welcome to USD PCE at TRADARS News.
Okay, there you go. Cool, right? Busy day. All right, busy day. So that's where you find all that kind of stuff. Oh, and for those that are members of TRADARS, I posted a challenge yesterday. Looks like 7 people have taken the challenge. And this is, I give you the download to the summary of economic projections released by the Fed last week. And I challenge you to actually read it, think about it, and write things down and leave a comment. And of course, once you do that, you get to see what everyone else has also done. And you earn points to get on the leaderboard. Oh, Kyle took over first place. Yeah, very cool. Anywho, let's get back to it. Flip over to the technical side. I want to thin this out. I don't want to look at key levels. I don't want to look at complicated patterns. I don't want breakouts. I can leave breakout there and we'll see. Yeah, let's thin it a little bit. I'm looking for direction here. Yeah. Whoa. Oh my God, look at that one, huh? Yeah. Kiwi got strong and Euro is showing signs of weakness. Anyways. Now we got to be careful because big news like this can change everything, right? Because remember, this is patterns, right? These are just patterns. They're not predictions, they're patterns. They're things that are forming or might form. And statistically, we know 66% of the time these actually form, but 33% of the time they start to form and then they fail. Well, that's still pretty good, right? Still pretty good odds here. And what would make a pattern fail? And it'd be unexpected news, like a giant 3.0, right? A 3.0 on GDP. Yeah. That could break things down. Like, for example, this is an up channel. There's no doubt about this. That is an up channel. And if you're trading an up channel, you would expect to go from there to there. 100% agree. But boom, a 3.0 GDP that says, hey, the Fed's not going to cut as much as you priced in. Yeah, you could have that counter move and that could break down. So you got to be careful. Got to be very careful. Okay? So far, it seems to be working. Oops. Okay. So far, it seems to be working. Is that strength or weakness? Is this pattern showing signs of strength or weakness? Yes, strength. Is this an opportunity or a threat? It's an opportunity. Cool. Now, there is a threat, though, and the threat is because of that big GDP number. Okay, what does this do? It would say the up channel is threatened by a change in news, which changes a change in, creates a change in sentiment, right? And so now you know it's failed. Because things have changed. And that's what you have to be in tune with. In tune with. So you want to look at, you want to find some congruency. So that says dollar weakness, but this says dollar strength. This says either euro weakness or yen strength. This says euro weakness. This says potentially some euro weakness or yen strength. Difference here is this is a 15-minute and this is an hour. So this 15-minute has a down, but this would have a further down. So they're both correct. This just shows maybe 2 legs, maybe 3 legs. Meaning if you're going to trade the 15-minute chart over here, you would get a down, 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 up, up, sell, down, 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 first target, up, up, sell, down, 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 up, up, sell, down, 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 second target. This is, an intraday trade, and this might be a day trade. The difference only being distance, or this could be like a swing trade. Okay, one might be worth 30 pips, the other one might be worth 300 pips. Same though, same, only different time frames. Okay, USD Mexican peso. We were talking about exotics. Was it last week or Monday? Maybe it was Monday. But we had USD Rand dropping, and it did drop. Oh, yeah. And so now the thing is, can we get peso to drop? Well, once again, if the Fed's not going to cut or cannot cut as much as we all priced in, then dollar could get strong today, and that is bad for emerging markets that have debt priced in dollars. Their debt gets more expensive, or their debt gets less cheaper. Okay, pound yen. This is a threat. Let's just jump in here because this is important. Okay, it looks confusing, right? No, it's not confusing. All right. You can see there was, technically speaking, a challenge to the primary line. And if it breaks, okay, that's what it's talking about. All right. So strength, weakness, opportunity, or threat. Does this pattern show strength or weakness? Everybody gets quiet on this one. It's easy until it's not easy. Strength. Okay. So when there's strength, the opportunity is to buy, right? Buy dips. By the way, I'm doing this for every single pattern on TRADARS. I have 20 already done. Buy dips at the red line. Okay? The threat is if it breaks down. Okay? Possible reversal, right? Possible, can't even read it. Possible, sorry, reversal. Right? Okay, is this an opportunity for bears? Clarence says could be. That's a BS answer. It may or may not be. Right, Clarence? No, come on, Clarence. No, we want to... It either is or it isn't. It's binary. Otherwise, we'll never be able to make a decision. Uh-oh, no. Okay. Oh, yeah. I have to recharge all our flashlights. Just as a reminder, guys, a hurricane is a-coming, and we've already had some storms, and it's still not even here yet. So if I lose internet or if I lose power over the next couple of days, today and tomorrow, that's what it's about. Okay? Okay. Ojo says, what is SWOT? Okay, this is an old school thing that we used to do back in like business school for business planning. And strength, S is strength, W is weakness, O is opportunity, T is threat. This is an internal analysis. Okay, so we're analyzing the internal strength or weakness of the prevailing trend. And opportunity and threat are external. Okay, in this case, what we're saying inside this trend, what are the external factors? Is it an opportunity to take it to the top, or is there a threat to that current, right? The threat meaning a change outside of the current trend. And we used to use this in business planning and stuff like that. All the terminology has changed now. So when I went to school in the 90s, that's the stuff I learned. Then when I went to school in the, when did I graduate? 2020. So then in 2018, 2019, having relearned this stuff, they've changed all the terminology and stuff like that. And it makes me gag, when we have to create our customer avatars. I'm like, bah! It's so current. I'm like, oh my God, that's so now. But anyways, our customer avatar. But anyways, so going back to this, it's not an opportunity for bears. It's only a threat to bulls. Okay. let's talk about why. Okay? There are only two things a bear can trade. Okay, Clarence? I'm going to pick on Clarence today. Uh-oh, hang on. Yeah. I'm going to pick on you, Clarence, right? CH, the 4th and 5th and 6th are all going to remember this lesson. It's going to go down in history. All right. There are only two things a bear can sell. And I would have to spell it properly. How about that? All right. Two things, okay, bears can sell. Okay. One is a reversal pattern. Can you guys give me an example of a reversal pattern? What's an example of a reversal? Yeah, double top. Head and shoulders. Lower high and lower low is not a reversal pattern. That's what I'm getting at, Clarence. That is what I'm getting at. Okay? That's a continuation pattern. So there you go. That's our major breakthrough. So this is not a reversal pattern, right? Okay? Then after a reversal pattern has occurred, then two, okay, lower high. But not until after the reversal pattern. So, think of it this way. If this is a threat to bulls, okay, then you want to look for a form, like that's most ideal. Now, I mean, look, I can't be too harsh on you, right? Clarence, I can't be too harsh on you because you could do this. Yes, you could lower low, lower high, lower low. Yes. But what's preferred, okay, what is preferred is a double top or a form. It's more reliable. A second one here, a lower low and then lower high off that roll reversal. Yes, that is okay, but it's not as preferred. I'd rather as a lesson give you the hardcore answer and then say, yeah, but you're right. But I want you to know the difference where you're like, okay, you could take it, but what you really want, what you really, really want, okay, is a hardcore reversal pattern. Now, TRADARS also does more complicated patterns, and it could prepare you for this. So maybe in that context, okay, maybe under that context, like a Gartley pattern, okay? So it goes up, down, Well, the Gartley pattern is helping you pick out when it's likely to make the lower low, and then you would trade the next lower high. So you can. But I do want you to, Clarence, like, understand the slight, right? The slight difference, right? So like now if I throw down a Gartley, what am I doing? Wrong way. So let's go back and only do that, like a Fibonacci pattern, okay? Gartleys and butterflies, they're all Fibonacci. Okay. Like here. Okay. All right. Easy peasy lemon squeezy, right? You see how easy this is? Yeah. All right. What this is saying is right around 93. Don't be shocked if this comes down. That's the first one. And this pattern suggests if you breach C, you are probably going to go to A. And then if you go to A and break A, it's really, really gone. So you could anticipate maybe inside this pattern clearance, let's say you get to 93. Okay. And then on a smaller time frame. So now you drop into a smaller time frame, right? And you start to see lower low, lower high. Yeah, okay. Or even on this higher time frame, you can take it. Sure. Because you're already inside a probable reversal pattern. Not just the lower high. Or not just the lower low, lower high. It might be. But to increase the odds of success, it'd be great if you knew on a higher time frame you were in a key point of a reversal pattern. So now you're still just trading the reversal pattern. What I want you to do is like, so we had a trend like this, right? Right, an up channel. Or in this case, a wedge. And then there was a challenge. And it said, okay, it might drop to here. Okay? Yeah. So under that context, could you do one of these? Yes. Can you make it even stronger than that by finding higher time frame analysis? Yes. But make sure at the very least you know how to trade that one. But what I'm teaching you is, yeah, this is what you should anticipate. Either a test of here or a test of here. Okay? And I still think it would do one of these first, which then creates, a top, double top. Yeah. So would you guys like a what do you call them? A flashcard with this image and what it means? So a strategy overview. A SWOT analysis. Oops. And in fact, it's like this. Oops. Let me do it the way I did it. Oh, come on. Why is it not? There we go. It's actually this way. And then notes if necessary, explaining the key little uniqueness. Would you like that for a pattern? Yeah. Well, I've already done 20. And yeah, and then a video. Yeah. And then burned once the video attached to the chart. Yeah. Yeah, Bert, I'm only chuckling. Yeah, your suggestions are always like spot on. Yeah, absolutely. So I'm joking with you, in a friendly way, not in a put down way. Yeah, I just can't do it. Yeah, that's all. Well, my vision for this is a video for each one, just like Bernd was saying, not one long hour video, but if I have if I come up, let's say I end up finding 30 patterns to explain, then there would be 30 1 minute videos. So when you find this, you could just look that up. You're like, oh man. But then what I can do is give you the slide so that you could just download that. And you just a little download right next to the video. But I thought I would see if I can get a graphic designer to just line everything up perfectly so that if you downloaded a file, right, Bernd, I know exactly what you're thinking. That's why I laughed. I didn't laugh at you. I laughed at me because I totally agree with you, and I'm just not going to be able to do it. It's just the way it works. Everything just can't be done. And if it can be done, it's not going to be done in the next year kind of thing. So I'll just, but anyways, I want to talk to a graphic designer so I can have them build a downloadable file. So let's say it's a PDF. And then when you choose to print it and you go to your printer and you say two-sided, so it's going to print on two sides, right? Then it'll print it just right so that on one side you have the pattern, but all the strategy overview will be there, but the SWOTs and the notes won't be. And then on the other side, it'll be the strategy overview with the SWOT analysis and the notes. And quite literally, as you're studying for an exam, you can look at this pattern and see the information that TRADARS is sharing with you, which is the pattern and the strategy. And then you should be able to determine strength or weakness, opportunity, threats, and any unique notes that are associated with that, and then be able to just flip it over. And then just have a deck of 30. If there's 32 patterns, we'll have a deck of 32. I can't make it 52. That would be great, except I don't think we have 52 patterns. Okay? Or I find a printer that will actually print them. It'd be interesting if you just want to then you'd order them, and that would cost you some money, but it couldn't be that much money, right? Probably, again, Bernd, it seems easy enough. Totally agreed. But no, it's just not. It's all dynamically driven, and so it's more. Put it this way, it's like no. We'll just leave it at that. But right, but I'll put it in a course, and I'll make it available, and I'll hire a graphic designer, and we'll make the flashcards. I would even like a poster so you can put it on your wall. And there's the traders patterns, right? Dude, I'm willing to do what I can and be ridiculous about it. And then they're just out of sort of technological stuff and the way that everything works behind the scenes. Other things just can't be done. It would just be outrageously too difficult, time and money wise. But anyways. I'm just not going to pick that battle. So anyways, cool, right? You can see one of the most common patterns here are ABCD. Okay, and the nice thing about these are just trends. Okay, and they're Fibonacci extensions. Okay, these are names and stuff of these patterns that people are used to. I just look at them as simple Fibonacci, right? But what it's telling you, and again, this goes back into the nuances of why there's a note section on the slides that I'm creating. Okay. This is what? A bullish opportunity. And if or when we get to D, what is D all about? Profit taking. Okay? And so the suggestion here is around 135, probably a pretty gosh darn good opportunity to take some profit. And is it a bearish move like this? No, probably not. Probably not. But you should expect at least a 3A2, and that's a roll reversal, right? And then 618. So the way I personally trade all these things is I expect bulls to sell here. And then I expect bulls to buy here. That's what I expect. Now, what if we challenge C? What if we go from here to here and get 100%? Now what? With me on it? Do you want me like leaning sexy against the wall? My cutoff shorts. Hell yeah. Okay, likely a reversal. Okay, and what type of a reversal? Now, what point? And what do you call it? Yeah. So at B, okay, B now becomes the primary, and you would anticipate up to B, which is now what? A to B, C, D, E. So now F becomes the new aggressive short, and G becomes the conservative short. And then you take the distance between here, and you project that out, and we're on our way to 131. Right? Right. No, Lederhosen burned in my Lederhosen. Yeah. Anyways, yeah. So can you see all of this stuff? Can you see it? Does it? Yeah, it's good, right? Yeah, it's good. So C to D is your opportunity. So I'd write it down as strength, weakness, opportunity, and threat. Okay, this is a bullish move. It's an opportunity to buy. Cool. But expect, the threat now. So there's a threat. I'll do the threat in yellow. The threat is expected profit taking that could lead to a problem. Will it lead? No, that's not what we're saying here. But if it gets below B, it's a level of caution, because we're supposed to do this. Hua? If we're so bullish, then that's what it should do, right? Okay, perfectly fine. What I'm concerned is people look at this and say sell. And TRADARS strategy will say, hey, around 135, anticipate a bearish move. So you're like, okay, sell it, right? Whoa. No. But you should anticipate this. Now, if you get a 786 to 100, oh yeah. Oh yeah. Oh yeah. That's concerning. And I have a discussion about this in my book. And the example I give is this, okay? Where it goes high, right? Higher high, 100% pullback, lower high, right? And then eventually what? Break, pull back, down. What do we call that? Well, the way that I measure things, by the way, is I measure this as an uptrend until we get that 100% pullback. And then that kills it for me. Okay? That kills it. I'm now not happy. Okay? Then I go to it, right? Then I analyze everything mentally differently. Now I look at this as a channel. That's the way I look at it. And these patterns are all the same and all different. And they can just, as long as you understand what they're saying, because remember, out of let's say 100 traders that have all learned how to trade from different gurus and different books and such, we're all going to do the same thing slightly different. And this pattern is valid. But I'm like, well, how is that different from a channel? Well, someone else is going to measure it this way. And they're using Fibonacci, but they're not using support resistance lines. Okay, fine. Whatever. I don't care. And someone else is going to do it, once again, slightly different. And maybe this is forming a Gartley pattern, and a Gartley pattern guy is going to see it, or gal. But we're all going to use whatever process to get to the same conclusion. Okay? It's like, how do you cook spaghetti sauce? Well, there are some general rules, but you're going to get 100 Italians cooking it differently. But it's all going to come out sauce, Like, you know how to cook it to the sauce, huh? All right. So anyway, so this 100% pullback, and let me circle it just for fun. I'll do that in light gray. This is the most important piece of information on the chart. At that point, I am no longer a bull. I am done. Am I ready to sell? No. But I am no longer a bull. And then what? Then we get the next piece of information. The lower low. Now, you probably had a guru that told you sell this, break, right? I'm going to say most of you, right? Or how about this? Many of you were taught to sell the break. Let me tell you that is wrong. And I told you that 20 years ago when I wrote my book. That is wrong. And actually, I'm thinking about doing a video series on this subject, actually, where I remember doing this project that I'm doing now. We're doing flashcards for you. I saw a pattern like this. Okay. And you guys were taught to do a couple of things, I'm sure, by some guru. Okay. To trade that or to trade that. Oops. Come on, blue. Come on, blue. Gee whiz. And so you look at this and it's a bullish trend. That's how you trade the pattern. And it's wrong, in my humble opinion. So I thought I'd actually do some YouTube shorts on this. Here's the pattern. You know how to do it. The only thing is you know how to do it wrong. Okay. So what's the better way? Yeah, that's the better way. And so this here, I found through experience. Remember, I never had a guru, right? Bubba Forex, Bubba FX. I learned the hard way where I found when I sold that, I would make money and then I'd give it back and I get knocked out. So I have a new rule of engagement, right? In which I sell the pullbacks. Because I just found over and over and over and over again, it would work and then I would lose. It would work and I would lose. It would work, I would lose. It would work, I would lose. So instead, I developed the habit of let it break and catch the pullback. Now, all of this information is inside of this, in my head. You show me a pattern like this, I can see almost every scenario. If it does this, then it'll do that. If it does that other thing, then there's the next thing. And that's 20 years of staring at charts, right? 20 years of staring at charts all day and all night. So I guess it's my job or my challenge through, repetitive but important coaching that you see all this stuff. You get step 1, step 2, step 3. These patterns are like, okay, step 1, it's up and it's trending, so get on with it. But then, okay, here's the vulnerability to that trend. What would be, so you see the potential and then you see, okay, it might reverse, but it hasn't reversed, and it might, but it hasn't. Is it going to? And when you're now staring at this section here, you can put everything into context. A 382 is a buying opportunity. 618 is a little disappointing. 786 to 100% is a game changer. And you know those subtle differences. And in fact, now you know if it makes 100% pullback, you've already anticipated the reversal patterns before TRADARS has even shown you the reversal patterns because they haven't even happened yet. TRADARS just doesn't miss the fact they've happened. But you need to then understand, okay, where does that reversal pattern fit in the context of different time frames? See, there's still levels of skill here, but we call that your alpha, your ability to take in this information and make good decisions. Does anybody know what I describe this pattern to be in my book from 2000? I wrote 2006, 2007. Does anybody know? Remember, my goal is for you to remember. My goal isn't to teach it 10,000 times. My goal is for you to remember it, even if I have to teach you 10,000 times, but at some point I anchor it. The old man easing into a hot bath. This is important. I wrote that line for you counter trend traders. Having started coaching in 2005, I think it was, my goal was to surround myself with like-minded Forex traders, focused, driven people. So I started in 2004, 2005. So around 2007 and 2008, I'm writing this book, and I wrote this for you counter trend traders because when I became a coach, I found a different animal. I thought we were all the same beast. We are all similar. Somehow we have an entrepreneurial spirit. Somehow we know the odds are against us, and yet we still think we're going to have a positive outcome. Okay? So even though everyone else thinks you're mentally deranged, you think you can do this. Cool, I'm with you. I was in that same boat. Hey, 95% fail. Hey, as an entrepreneur, a 5% track record of success is fantastic. It's better than opening a restaurant. So anyway, so I'm like, great, give that to me because I'm going to be in the top 5%. Cool. And then I start coaching and I start meeting other Forex traders. Before FX Bootcamp, I never met or even talked to a Forex trader. As far as I was concerned, I was the only retail Forex trader in the entire world. And it's hard to believe, but this was before YouTube. This was before Amazon.com. This was before a lot of stuff. And I was completely isolated, completely alone. There was only one book ever written about Forex called Forex Made Easy. And it was basically something that cost you $5,000 a year, and it was a MACD. That's all it was. It was a MACD indicator. It wasn't even charts. And so this software company sold a book called Forex Made Easy. And of course, that was dumb, right? So I had no books, no gurus, no internet, no videos. There was nothing on Forex. So when I started FX Bootcamp, I surround myself with other like-minded people, and then I find out there's this beast out there different than me, where the only thing they do for some reason is trade against uptrends or buy downtrends. And I ask them, well, why are you buying a downtrend? Because it can't fall any farther. And I'm like, oy vey! Oh my God, right? You're like, no, it can fall forever, bro. No, that can't fall any farther. Buy it. I'm like, why don't you just sell a falling market? Why don't you just buy an uptrend? Buy dips on an uptrend. So I've been teaching it that time, right? And so this lesson went back to counter trend traders. I thought about this a long time, by the way. This is why it took me a long time to write that book. I knew exactly what I wanted to say, but it took me a while to articulate how I wanted to say it. And so I thought about it, and in the book I say Forex reverses like an old man easing into a hot bath. There's no need to counter trend because it takes a long time to reverse. You're never going to be too late. Okay? The biggest thing is you're too early. That's degenerate gambling. I bet you it'll fall here. No. But here, yes. Okay? And this is quite literally, like if you look in the book, this is the chart I gave you, right? And I see it over and over and over again. But the thing is, you don't have to sell up here because it's gone too high. Never, 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 never. But, as I mentioned, if you cannot recognize a drop to C, that's going to be your problem. That it drops from this level back down to this level, okay, marked as 100. If you can't notice that, that's your problem. That's going to be your major problem. That 100% move sets up the lower high. So some people, what they end up doing is they were a bull here, they were a bull here, they were a bull here, so they're a bull here. Wrong. That's wrong. You can be a bull anywhere between the 382 and 618. Anything after that, Houston, we have a problem. A 786, I'll tell you what we'll do. Okay? Because I know the future. Right? I have a crystal ball. Oops, didn't, but I can't draw. All right. Okay. If it makes a 786, this is what's going to happen next. Okay. Now, let me show you another one. If it does one of these, then it's going to do one of these. No, I know you can't see that. Okay. Nice. So I have rules of engagement for everything. Yeah. And the cool thing, though, is TRADARS makes it easier and easier and easier and easier and easier. Because, like I said, I'm not a Gartley guy. I told you this yesterday. I would never spot this. Oops, wrong one. Come on now. I would never, ever, ever, ever spot this. Where did it go? Okay. I would never be able to spot this. I just naturally would not see this. Does it make it invalid? No, it makes me deficient. But I fixed that. See, I would look at this, right? WWWD, what would Wayne do? Wayne would do something like this. And I would, okay, buy a 618 and take it north. Hopefully even here. Okay? So that's what I would do. But now, because there's a Gartley, I know to be more in tune because of the Gartley. You have all these different things, all these angles, right? And I know now what a Gartley trader would see, even though I'm not a Gartley trader. I know what they see. They're anticipating a move up to 93, and then they're going to take it down to 618. They're going to take it all the way down to A. I'm like, oh, God, really? And so now I'm aware of the threat that I used to be ignorant to. I used to be ignorant to that, right? This is how TRADARS instantly has impacted me personally. Even after 20 years, suddenly I'm like, oh, good, I'll never miss a Gartley pattern ever again. And I know how to trade it. I just don't like it. Oh, yuck, I hate this pattern. But I know other people love it. And I know every time I meet a Gartley pattern person, you know what they're going to say? It's very reliable. Okay, bats and butterflies might be more reliable. It might be their more favorite pattern. My problem is I'll never see them because it's not how my mind works. I don't have a mind that says, okay, like Gartley people, they're like, they know the angle of this and this angle and this angle and this angle. So therefore it's going to create that angle. And I'm like, dude, I just don't work that way. But you might be an engineer and you might have an engineer mind and you might love that. The importance is I know somebody's going to trade that and I know what they intend to do. Take it to C or take it to A. So they're going to trade against me. Oh, God, I need to know that, right? Yeah, I do need to know that. Okay. By the way, between now and next week, I'm going to try to add more cryptos for you. This is your last chance to tell me what you want. So I'm just looking for Fibonacci patterns. Remember, there's none on cryptos. There's only one on single stock. Oh, look at this. Both are Gartley patterns, 15 and 30, so they're the same thing. Okay? This is a complicated pattern, isn't it? What does this mean? Up or down? Let's see if you guys get this one right. So remember, I'll give you the strategy and I'll also give you the strength, weakness, opportunity, and threat. Bernd wants Solana. Is it at like 80 cents right now? I think I bought it at $2. It might even be 40 cents. Oh no. Yeah. Okay, Solana? Okay. Anyways, is anyone going to answer the question? Does this pattern mean up or down? Short term up. Long term short. 150. I must have bought Cardano. Guess I bought the wrong one. Yep. Okay. Short term long, long term short. Well, I probably would, like I said before, I'm going to look at this slightly different, even the way that TRADARS would draw it, because I'm right. I always start things off as bottoms like that, right? And then I'm going to look at this level and I'm going to look at this level. And so you can see I agree with everything it says, but just for different reasoning. So let me get rid of some of this, right? So what would I do? Okay, a double bottom. Yep. Remember, I have to already be a bull. And then up, down, and up. So I agree with the up. I agree with the right. And then down, 618. Okay. But here's the thing, and this is why I know it's right and why I'm so happy to have TRADARS doing stuff that I'm incapable of doing for myself. And that is, I see this right here as a major spot for bears to live. See, it's technically bearish. So I could try to climb the ladder here. What TRADARS is spotting for me is, yeah, that's a problem. And in particular, if it was a huge downtrend in the past, yes, dude, yes. Yeah. And I might miss that, right, Clarence? I might miss that because I'm blindsided for being a bull for whatever reason. For whatever reason, maybe it's some sort of pivot point or something. And it's alerting me to the fact that there is still a high probability of down. And I probably would have missed it if I was blindsided by bias. And by the way, that's what bias means. So don't say, oh, I don't have that bias problem. Well, then you don't have a bias. Now, if this pattern doesn't work, then it failed, but I also anticipate there's a 66% chance this is quite legit. And so at least now I know. Now, it might be different on a 4-hour chart, right? Yeah. So I need to pay attention to these things. But I would never spot these. Okay? This might be a good short on the Dow. Okay? And then profit taking. Okay? Yeah. Like, look at this pattern. I'm not going to see this. I know how I work. Am I going to see that? Not the way they've drawn it. So what would I see? Okay, I see the high, a pullback. Is that a concern? No. Lower high. Is that a concern? Yeah, somewhat. I expected a higher high. What they're saying is it's not quite over. This lower low could still lead to a rally. And I believe it works this way like a higher time frame issue. So on the higher time frame, someone's just going to do this. On the lower time frame, it looks like a downtrend, right? And then suddenly we get the big up again. So one way to look at this is the shorter term failure. But if I delete all this, okay, if I look at the high and the low, let's eyeball a 618,382. Okay, that's the buy zone. There's also a little roll reversal here. So let's just call all of that a 618 of the bigger move. So on a higher time frame, traders are going to do something pretty basic. Oops. X to A. Okay. A to 618. 618 up. To a higher high. On the lower time frame, it's just consolidation. I imagine some people would also see it kind of like a falling wedge, right? Followed by a breakout, pullback, long and gone. See, I always think these Gartleys are way overcomplicated. There's always a better, easier way. And I think genius lies in simplicity, not complexity. So my job is to recognize a higher time frame. Also, breaking above an old high, and then using that as support, okay, to kick off into the future. So we have up, consolidation. Do I buy here? Well, if I didn't know it was going to consolidate, yeah. But the thing is, you bought here and you did not get a higher high. It's a problem. So do you buy here? No, because once again, you have no real idea that it's going to go up. You have some probabilities and some guesses, but you don't know. But when you do know is when it makes a higher high, higher than that high. Then you re-engage a breach of C with the anticipation of a breach of A, which the anticipation of a continued uptrend in the direction we were going anyways. Okay. So Peter says, hey, this it seems like it did play out this way last night. Yeah. Right? Yeah. So I'll leave you at that, guys. Like with TRADARS, you have the fundamental and technical analysis now, and of course coaching and community and all the training courses that really take your game up another notch. Not just having kick-ass tools fundamentally and technically, but really opportunities to sharpen your sword, because you go to battle every day. And I am grateful to have something do what I'm weak at. I am no longer weak at spotting Gartley patterns. Do you understand that? After 20 years, I am no longer weak at spotting and recognizing Gartley patterns, and I am no longer weak at recognizing the trade strategy of those people that do love and trade Gartley patterns and butterfly patterns. It's no longer a weakness. I've been cured. Okay, I've been cured. I'm not a scalper. This is a little scalp. See, I don't like those. I'm just going to turn those off. I'm not a scalper. I'm a trend trader. Again, maybe I can fix that at some point. Okay, and use that to my advantage. Right now, I just don't want to. But TRADARS, because of the use of software, right? It's just software, has cured a weakness of mine. And so for that, I say, hallelujah. And if you are, okay, a member of TRADARS, tradars.com. If you are a member, today at 4 p.m., okay, we have a swing trading meeting. Every member of TRADARS has access to this. Click on the private room. Last week, a bunch of people clicked on the live webinar room. No. Okay, click the private room and it lets you in. You can also get it here. If you RSVP, boom, I am now RSVP'd. I will get the direct login link emailed to me just before the start. You'll also get a reminder. So I will now get a reminder. How awesome is that? Everybody is invited to that. Cool. So peace on earth. May the pips be with you. May your profits be above average. Please have a wonderful trading day. Maybe I'll see you later. You too, Clarence. Cheers.